Hey, what's up, all you sharks? Welcome to Shark of Traders YouTube channel. Today we're going to be breaking down ticker symbol NIO. It's in the EV sector and it's doing a lot of interesting things within the sector to try to capture more market share, especially within China. I really like what NIO is doing. I also really like the EV sector long term, especially in quarter 3 and quarter 4 in 2021. Go ahead and check out my Twitter at Shark of Traders to check out some of the fundamentals and what the company is doing to capture market share. But for now, let's go ahead and dive deep into the technicals. The first thing that we're going to break down is going to be RSI. I've circled this section here for us is because we're looking like we want to break the 50 RSI barrier. But until we break that, guys, we're not going to see an uptrend or we're not going to see a nice little breakout. 50 has been a wall for us leading all the way back to mid-March. And until that level is broken and it's able to create a support there, I'm not very positive that we're going to be seeing tons of breakout within the second quarter. But like I said, I'm watching this closely for quarter 3 and quarter 4. Another bearish trend that I don't necessarily like is going to be our stochastic, where our slower D line has crossed our faster K line, and it crossed in an oversold territory, okay? Or an overbought territory, sorry. It's oversold down here and an overbought in this area. So when things are overbought, it tends to come back to its average true trading zone, and it also tends to pull back a bit, just like it's doing right now. We got alerted that the slower D line crossed our faster K line here on April 27th, and ever since then we also got flagged, as you can see up here in our algorithm flagged us, letting us know that bearish trends are incoming and the indicators are telling you to take profits. This is now starting to pull back, and unfortunately, it's looking like our slower signal line is going to be crossing our MACD line here soon as well. Also, I don't want to be jumping into this trade until our MACD line is above 0 and our RSI is above 50. As you can see, back in the past, I've circled some of these bearish crossovers in our stochastic, and every single time this happens, we have seen a pullback in the stock. Each date, this one very significant, was a significant pullback, but each time, if you can scroll up to the price trend, we are getting pullback at each one of these locations, okay? So I don't like that we're getting that right here as well. All right, so now let's go into the price movement as well. One thing that I've noticed is going back all the way until almost beginning of March, we've traded within our 200-day EMA right here and our 100-day EMA. I have these labeled for us. So 36.37 is our 200-day EMA and 42.27 is our 100-day EMA. I do believe that within quarter 2, we're going to be trading and stay within this channel, within this 100-day, 200-day EMA channel. Now, I do believe that if we pull back to that 36, 37 range and we're able to hold that as support like it's been, I think that's going to be a good buying opportunity because, you know, even if it trades within this range, a $5 to $6 per share increase is a very good trade. But for the time being, I won't be jumping in large long term until the 42.27 is able to be created as a new support. Once this gets created as new support, we have a larger channel to be trading within, and it just gives us a bigger risk-reward ratio, and that's what I'm looking for as a trader. Especially within 2021, guys, I've been really defensive. It's not like 2020 where you could just pick a random stock and everything's going to go up. You got to make sure that you're getting in at the right time and you're not just buying any stock. Because if you're just buying anything at any prices right now and you're not caring about your entries, you're going to be burned in the long run, and that trade is probably going to be red on you and not green. So I'm like a sniper out there, y'all. I'm really looking for my perfect entry opportunity, just like a great white shark, looking for the right opportunity to bite, right? And right now, it's not that. We are seeing bullish trends within each indicator, okay? And we're trading around, higher than our 8-day EMA, which we do like, but it's looking like it might want to return to this 200-day EMA around the 36, 37 level. Like I said, go ahead and check out my Shark of Traders Twitter page, and you'll see all the valuable information that NIO is doing. You can also see what their market share that they're capturing in the China sector with per car sold. I really like NIO in the long run, but for me, I'm really watching Q3 and Q4 to see if we can start to break this 42.27 and start another uptrend, okay? But I love that we're basing here. Just like before, when we were basing a long time, okay, we base for a while and then we break. Base for a while and then we break. And we're starting to do that again, and it's exciting, okay? But don't buy at any level. Wait for the 36, 37 pullback to that 200-day EMA. And it might be a great opportunity even just for a quick swing for a nice $4 to $5 per share increase. But with volume, watch for this to go up, okay? And watch for the 42.27 to be created as support. EV is going to have some good news coming around the corner. Unfortunately, with our chip shortage, there's been a lot of disruption within that sector because they're not able to produce cars at the same rate. But that's going to be solved relatively soon by the end of this year, and I do believe that the EV sector is in for another run. So go ahead, make sure you subscribe, guys. I hope you stay tuned for our other channels, and make sure you watch out for our next episode coming later today. All right, enjoy.